Scott, there were some other proposals in the budget that dealt with some sort of discrete topics. The length of GRATS, for instance, that's something that's on the table in this new budget proposal.
Yeah, GRAT is a transaction that a lot of our clients have used in the past. Basically, you transfer assets into a trust, and over a short period of time, generally we've used these 2-year short-term GRATs. In effect, what you do is you use this technique that we call a zeroed-out GRAT, where we'll transfer a certain amount of assets, and it could be business interests, it could be marketable securities, it could be hedge funds, really anything that you want. These assets are transferred into a short-term trust, and as long as over time, let's say this 2-year period, the investments inside of the trust beat the IRS hurdle rate, which is currently 1.2%. In effect, you could transfer assets into a trust, you get an annuity back over 2 years, which approximates what the GRAT would be worth over this 2-year period, and then at the end of time, at the end of the 2 years, as long as the trust has outperformed this current 1.2% interest rate, any of the post-transfer income and appreciation will then go to the benefit of, let's say, children, or trusts for the benefit of children. So it's been a technique that we've used often because there's no downside risk and we can get a lot of assets tax-free out of an individual's estate. The downside in using a GRAT has always been that if you unfortunately pass away during the period that the trust is in effect, all of the trust assets are brought back into your estate, and then in effect you haven't accomplished anything. Well, one of the things that President Obama has proposed is lengthening the GRAT so that they would have to be a minimum of 10 years and they couldn't be zeroed out. There had to be some value to them. So this is going to significantly affect the utility of using these GRATs, so that if you were inclined to do one, or if you have one on the table, probably makes sense to do it sooner rather than later because it may not be there.
So this doesn't eliminate GRATs, it just sort of eliminates the short-term ones where in a rising sort of value environment with low rates, you can get a significant amount of wealth transferred to the next generation for practically no cost.
That's right. But because of the risk, that you have to survive the 10 years instead of doing a series of short-term ones, the potential benefits of them are, are not as good.
Not as exciting, riskier.